What's happening, guys? We've got another Sunday scan coming at you. This time, the first Sunday scan of May 2022. I hope everybody's been navigating this market sell-off nicely, well. Like we talked about the last couple weeks, I'm not interested in any swing trades right now. There have been some that have been, making their ways in small cap land, such as RDBX and CYN. Those ones have been kind of grinding, coming back to key levels, ramping, coming back to key levels. But the one common theme is each time that they should break and, kind of change their trend or fail to follow through, they don't. They don't. And so RDBX, we talked about that level being 420 in the room. After the big blow-off move, I think it went up to like 5s and slammed down. It's a great trade, but it should have been staying heavy at 420s, not consolidating and looking like it was kind of soaking for higher. Then we had the same move later on, came right into VWAP. So you want to assume that that level is going to hold. And then later on in the day, we talked about the 530 level being a key level. And the reason for that is typically anytime we have the blow-off move and it slams down, I use the bottom of that candle as sort of okay, there's support at this level. That way it keeps you safe. That way you're not scaling and adding and adding. It's fine to start in my opinion, potentially anticipating that it might break down, but you should assume that it's going to hold that level. And that way, if you're oversized, you're not okay with it holding that level and going higher, then you're probably going to size down anyway. And that's really the key in this market is not fighting the trend. There's a lot of good right now. There's a lot of good stuff happening right now. And it's just about following what's working and then cutting off what, is not doing what you expected. And so we had some big gap ups. In this market, we've got the big macro type plays where a lot of times there's been a lot of morning ramps or big gap up and then a sell-off. And then we've got, stuff like ZYME and FNCH. So on Friday, huge gap up on ZYME. And then we got that failed follow through off the open. And then it allowed to kind of scale into that move throughout the day. And then same thing with FNCH. You saw the exhaustion move. We've got the channel that we're used to talking about where you've got this base and then you've got this ceiling. And you need to kind of see it exhaust out into the ceiling. Once it breaks down and confirms at the base, you let the trade work. And until it starts to either go sideways, starts to perk up, or do something that would suggest that it's no longer staying heavy, no longer staying in trend, it ends up being a really, really nice full day type of trade. So we had the same thing on Thursday on XPON. And that was a trade idea we went over in the broadcast and just let them put in the top, starts to peak out, finds a seller. And then the goal for that one was full day kind of fade, round trip 380s was the ideal cover spot. Ended up going lower, but that's fine. For me, it's sort of preparing for a move, taking the trade, moving on. And when I've been talking to people that are having a difficult time in this market, it's because they're trying to get more out of a trade. They wanted more. They're on the right side. They're trying to force the trade to do what they want it to do versus just realizing, hey, I just took a good portion of this. Like, it's time to move on and look for the next. And the good part about this market right now is there is a next. There's so many next type trades every single day and every single morning. It's just about trying to get the meat without the headache and then moving on right now. So again, just like RDBX and CYN, CYN, I had tried each day and, I had good entries and it flushed out. But for me, I was looking for more. I was looking, everybody else, in my opinion, is bent. They've probably been staying wrong. And, I'm going to just kind of see if it stays heavy so that I can scale in. So for example, I participated in the high fours or low fours, I guess, 415, 420s. Flushed out to 380s. That was great. Felt good about the trade, looking for that potential of a rescale. But instead of staying heavy, it flushed out, came right back up over that support. So right there tells you, hey, it should have failed there. It should have died. It should have stayed heavy, but it didn't. And so rather than scaling in, I still let the trade work for me, but in this case it didn't. It started to kind of grind back. So the good part is, it's not an ad. It's not something where, you fight the trend, but I do think that a lot of traders are swinging this thing short, and that's why it's here. They did a pipe, and it wasn't registered or whatever at the time, so I ended up coming back, and I think that given the size of the float, I think that they have a good control of all the shares. So I'd be super, super cautious until you start to see that blow off move. And one of the things that I've been telling traders in the room is, sometimes you get this ticker that you feel like you need to trade. And, you just take that off radar and you'll be surprised how many other better layup type trades are out there right now versus trying to force and find that trade on a particular name. And so for me, I feel like I was trying to do that on stuff like DOGZ and CYN and RDBX, just kind of, rather than just letting them do their thing, I'm over there monitoring, waiting for these things to kind of peak out, wasting time. I could just set price alerts and, wait for that to hit and then reevaluate whether or not it's a good trade. So I think that that's something that is important to kind of think about. Are you coming into the day trying to find that trade on that particular name, or are you waiting for these trades to come to you? And I bet if you ask that question, more often than not, you're probably trying to force a trade, find a trade on the name that you have been preparing for, that you think is close, and you don't want to miss it. And that's, in my opinion, the wrong way to look at things, because you take that off radar and look at everything you just missed. So my 2 cents, and I was aware of it on some of these other ones that I had been kind of watching, wasting resources. I'll put a little bit on, I'll wait for it to happen, and then it doesn't happen. So other than that, be aware. Tape is super, super thin. So if you step in front of stuff, CVNA this week. CVNA was fantastic. They had I think they did a notes. Somebody came in, bought the notes or something for 10%, which does not suggest anything about the company or the fact that it's undervalued or anything like that. And for whatever reason, they just swiped it up into circuit halt. So I kind of waited for that exchange to kind of come in and wait for circuit halt, blow off, pull back, retest, fail, and then I could risk towards the highs. And ended up coming way in. I obviously covered too early, but point is that tape was thin. I mean, $10 move up, $10 move down. I mean, that stuff can hurt. Same thing with BYND. BYND Fast Company had an article that came out and said that they were making the Beyond Meat a permanent thing on the menu, and then I guess it was misrepresented a little bit, and they ended up denying and changed up the comments. Came right back in. So you've got literally a $10 move up, $10 move down. If you're trading your normal size, that's outlier risk. That's a little dangerous. So be aware of that. Be cautious. But that was a nice one. Got a piece of the long, and then ended up getting short into the blow off. Thesis being that they probably needed to work out all the options, call sellers, all that kind of stuff. Let that kind of unwind, and then reality would kick back in. But again, too much, too soon. But remember, that doesn't mean anything if it stays strong, right? So you can come in with an opinion that this does not make sense, this shouldn't be up here, this shouldn't have gone so high. But if it doesn't agree, you need to make sure that you respect your risk. But there was some crazy layup trades last week. CVNA, BYND being two of them. And then the third big layup, or maybe even the Tesla would be a fourth, but the third one was OST. And OST, I tweeted the day before, and I said this is more than likely going to be the next JCSE and GNS. So if you were buying it long, just be aware what your true risk is. It doesn't matter if you're short. I'm not suggesting that it should be a short, but I'm suggesting that if you are going long, thinking it's going to the moon, just reevaluate and make sure that your risk is in check, and make sure you have a game plan in the event that you're wrong. And as you guys saw, OST opened in the 40s, ran up to 45 a couple times. In my opinion, did the same program that we've seen on DOGZ and all these other JWEL and all these other names. And for me, what confirms my thesis is the volume, the liquidity, the trend. And when that happens, that's where my confidence comes from. Not because of a price move or a circuit halt or anything like that. It's all about volume, liquidity, because at the end of the day, that's what this is about. That's what these moves are. They're creating liquidity. So what else we got? Video winners: Dustin Melchior, Kenneth Alvis, and Kevin Morrison. Webmaster at investorsunderground.com. Send me your address and your size, and we'll be shipping out a shirt to you. Thank you guys for the comments. Again, for anybody that's interested, all you have to do is write your key takeaway, like the video, you're automatically entered. I always just like to pick different names, good comments throughout the Sunday video scans. All right, a couple of things before we get into scan. Last week, took actually a lot of time off last week. BCRF, we had it on Tuesday. Monday before, we ventured around Boston. Greg came in from Arizona. Lance came in from Chicago. Zach came in from Philly. And we created some pretty good content. Helder came up from Rhode Island. And ended up being a really good conversational piece. I think you guys are going to get a lot of value out of it. I will let you guys know when that comes out. BCRF on Tuesday night, we had a blast. One thing that's pretty neat about that is Traders for a Cause is not just me. It's not just us as a board. It's not just, just a couple people. It's everybody that's been involved. And one of the coolest moments, I think, since we started this thing was Tuesday night, where we got a monster award from BCRF. And it was really neat. And once those videos come out, I can't wait to share them with you, because it was one of the best, I would say, not necessarily moments, but one of the most rewarding moments that I've had from kind of seeing where we started this thing and where it is now, and the impact that we've made, especially some closer than others. When it hits home pretty close. Tesla on Friday, fantastic idea. The goal there was, we've seen this before, right? So you should never forget when something happens before. If you remember, Elon said, "Oh, I'm all done selling," when the tax loss, or when he was taking his tax gains, or the whatever that was. He had a 10B5, whatever the insider trading plan is. But he said, "I'm all done selling," right? And stock gapped up. People forget, hey, he just unloaded a ton of paper. So, it's gapping up. Sure, he's done selling, but that doesn't mean it's going to squeeze. There's a bunch of inventory. So then it sold off the rest of the day. We had the same opportunity on Friday again, where it gapped up, ramped, and then just complete unwind. So that was a really nice opportunity. I got in there. I was very much so on margin and going for it. Got a good piece, but it was like 1, 2, 3 kind of test to this bottom, and that kind of back and forth on size, it starts to get a little tiring. So I did size down, and then it flushed out again. I sized out of the rest, and I missed the last, $15 per share or $20 per share, but whatever. Got a good piece, got good entries, and onward, upward, not worried about it. Shopping list. Make sure you got your shopping list ready. Make sure not to have too much patience. if you're wrong, be wrong. There's just so much range right now that if you stay wrong, things happen quick. So get on the right side, scale into the right side. When things start to shift, make sure that you're kind of readjusting. This is the market that we talk about, the V. You're waiting for the bottom to be put in or the top to be put in, because these types of thin market is what's going to kill you, and you don't want to jump in front when we don't know where the floodgates are going to close. And sometimes they don't, and it continues to unwind, and then you get in a position that you were not expecting. Should be proving you right or right out. And make sure that you are reevaluating along the way. Make sure that am I oversized? It's starting to consolidate here. Have I locked in enough? And if you haven't, you can always readjust. Is it staying heavy? Should I be applying more risk because I'm right? But just continually reevaluate your current position versus the current market conditions and what it's telling you, what it's suggesting, what it's doing, etc. So anyway, let's get right into it for the week ahead. All right, guys. So as always, I'm not a financial advisor. These are not buy or sell recommendations. This is for educational and informational purposes only. One of the things about this market is it's good to have, what you're prepared for. It's good to kind of have an idea of what you want to watch. But like I said, on the ZYM, FNCH, XPON, and all those types of trades, those are all about just waking up early and kind of figuring out what's going to move. See what happens pre-market. Do a little bit of due diligence to figure out which ones maybe have the possibility of selling paper, inventory, maybe prior offerings, if it comes into those levels, might be extra inventory, things like that. And if you spend the time doing that in the morning, you'll find out which ones you should focus on versus not. And also, you got to think about, a lot of times people are all on the same page. So if it stops doing what you expect, you're not going to be the only one. So the sooner that you're okay with moving on, you're going to stay out of those headaches from all the other stubborn folks that are, I'm going to see what it does. I'm going to see what it does. Boom, too late, right? So think about CYN, people sizing against that trend. Think about people on RDBX thinking like, how much higher can it go? It should pull back. There's no way it's going to go higher. Then all of a sudden it goes another $1.50 more than you thought, right? So you don't want to be in that situation where you're doing the same thing as everybody else and trying to, maybe hold through it and wait it out. And I can withstand this. There's no reason to be doing that in this market because there's just so much opportunity that you can just go on the sidelines and then revisit. So RDBX, I kind of feel like it might have a weak open, but this is where I want to be cautious of the morning fade, pre-market, kind of a little bit of a blip off the open, and then, rockets back up. And there's a lot of times where, I'm really focused on this. I really want to be part of this. And, it starts to fade. So I start to lean in. And then you realize that all that fade was just kind of shorts, slowly but surely being shorts. And nobody was really selling. And then it opens up big and you're like, oh, maybe this was a bad idea. So I always like to see how it reacts to that swipe move. You can learn a lot by waiting for that swipe move to give you the information. So that's sort of my game plan on this. The way that I would react to it off the open is if it went 657, something crazy, something where it gapped up and it had some squeeze out, which would be great. Had 100 million volume. I think we'd have a really nice opportunity there. SQQQ and TQQQ. This all depends, what are you more comfortable on? You could go long the Qs, or you could short the SQQQ, and it's the same thing. Or you can go long SQQQ and short TQQQ. and it's the same thing. But it just depends on what do you see better. You know, are you better at seeing failed follow through momentum versus trying to figure out a bounce? You know, that's really, everybody always asks me, why do you look to short, you know, some of these things? If it was like a triple leverage like UVXY or, you know, the 3X LABU or I think FNGD, those ones. For me, I always like the short better just because of the way that the product is, the instrument is structured. It makes sense to be short. But other than that, it's just really your preference. But we are coming up on some very, very key levels here on the daily. So it's going to be interesting to see sort of how this plays out here. For whatever reason, DAS does not have Friday's candle, but it's right over near 50. But we're coming into some big levels. We'll see how that works. But again, reactive trade in times of volatility, I like to go to products like this, such as the Qs, such as UVXY, and be able to use those because the liquidity is just, I mean, there is no stopping the amount of liquidity on these things. There's no random traps and things like that where you get that in small caps. It's just straight absolute liquidity that you don't need to worry about having too many or too little, unless of course you're fighting the trend. TDOC, Kathy of course was very bullish on this thing. I'm going to be looking for 9:45, 10 a.m. plus trend join. Whether it gaps up and fades, whether it weak open and goes, I am thinking that this is going to consolidate, and then we'll start to pick a trend throughout the day on Monday. So I don't have a long or a short bias, but I do think that after 9:45, 10 a.m. kind of figures things out, I probably want to join that trend. And I think that it might be a $2 or $3 opportunity. So it looks like, for whatever reason, the Friday candles are not showing up on these things. So I'll just go to the intraday type moves instead. But VAX, VAXX, really nice opportunity. Had a nice exhaustion move here. You can, just sort of draw a line. You can see, kind of blows off, fades off, blows off, fades off. And then we've got that sort of base that forms, and you can see that the 550, 560 range right around here is that key level to, believe that it's going to continue to fade, or if it starts to base, you can see how it doesn't matter if it's under VWAP. The first test came up, consolidated for a minute or two, and then continued on. So always look at those levels, always draw them. They will help you. Even the late day trade that we had in the room, you can see how that, it's kind of 760, 770 level. And you can see the base over here, and 680s was the level that I think I said 710 to 680s in the room. But you can see how this 710 kind of base right over here, and then the next level down around the 680s. So ideally, we get some morning shove, but on Monday, if 680s was peaking out, I'm interested in potentially fading it back, and you want to assume that 650s is going to base. That's what I talk about proactive covers, right? So anytime that I am trading on the front side of a move, RDBX was a great example where in the room had a great trade, participated in this blow off, but then you saw it starting to base over here in the 420s. And, once again, in the room, I had said, make sure, I'm repeating myself again, you're still on the front side of the move. This should have stayed heavy at 420s. If you have not adjusted, make sure that you have. If that's what your plan is. Otherwise, you are still kind of fighting the trend if you try to be overly patient. Then you have the same thing over here, 450s and VWAP, and then again, like I said, on the 530 range, it was right over here. And the reason for that is anytime that I see a big move, let me just zoom in. Anytime we get some sort of blow-off move, it slams down. I always look at that prior level. Where does it slam and where do they catch it? And at that point, I draw a line. And then that reminds me visually, don't size against this trade. Even if you think it's gone too far, even if you think it has to pull back, be cautious above that line. And sometimes just by putting that line on your charts, it will remind you that, hey, you're not supposed to size. And it's going to save you time and time again, I promise. And it's just like a little quick cheat sheet to kind of see what levels matter. Where, in a time of panic, do they come in and just, have an invisible hand that soaks it all up? And so anytime there's a big exhaustion move and it slams down, I always look for that, and I put a line on my chart as a reminder not to get too aggressive. ZYME, pretty clean. We talked about 780s being a key level, and then 715s in the room. And the way that I use these sort of levels is, if I'm going to participate in any of this, I need to be okay with 780 kind of blowing off. Otherwise, just avoid it. Avoid it for the backside or have a stop, whatever you need to do. But I will not take any size that will have me emotionally covering into the key level that needs to be, kind of tested. After we break down and fail, and you can kind of see it bust down under this 7, flushes out, comes back, confirms, never look back for the day. So that was a great opportunity. And as you guys know, basically what I look for the next day, morning ramp back up to this sort of support level, maybe the resistance. So I'd be looking for a gap up, push, failed follow through type of opportunity. Same deal with FNCH. I'm looking for the same sort of thought process, and you've got some 270s and this 250, 260 range, something like that, as that channel that is important. So ideally on Monday, it ramps up into this range and exhausts out all the traders that maybe are being a little bit too aggressive, and then I'll look for a failed follow through momentum. But same concept, the reason for the short on Friday, you can see same thing we just talked about on this ZYME, exact same thing. And that's why you saw me participate and scale into that winner, because we got the confirmation we needed. It flushed out, and I mean, when it pulls back like this, there's no longs that are going to get bailed out unless we have some sort of crazy move, at which case you would need to adjust. And typically when you get a move like that, it's after long period of consolidation, such as this, where it decides to kind of grind back up. But instead, failed, and it continued to unwind throughout the day. So those are the perfect style trades. And I feel like we're getting a lot of those just because everybody wants to chase a small cap, but then they realize the market's in the crapper, and it's a time to liquidate. So there are the ones that get away, such as RDBX and CYN. So, when you normally have this flush out, instead of staying heavy, as you saw with RDBX, you had to flush out, but now we had this slow and steady kind of grind back, but it gave all the warning signs in the world. 420 bases, you can see all these bases at 445, 450s, 460s. The only reason you get bent up on that is if you're stubborn. You had every warning sign in the book. 420s, 440s, 450s, 460s. It's just about whether or not you listened to it. So just be cautious, and a lot of times you'll see that the answers are right there. So again, that was FNCH, higher the better. ITP, this one's has yet to have any real reason to fade. I've been watching it. It's been straight up. I love these. I absolutely love when these things get rolling, because they're the ones that go down 30, 40% in one day. So I'm focused, and I'd love to see this go 50, 60, 70. I mean, I don't care. Higher the better. But each time it flushed, it held a base, and there wasn't any failed follow through momentum that we look for, where it flushes, it attempts to rally, and then it stays heavy and pulls back. Instead, it just kind of based, ramped up, ramped up, and so you need to be sort of aware of that. NUTX, SKYH, all same old, higher the better. These are perfect examples of putting them on scan, not losing them off radar. We had the same sort of exhaustion level that that we talked about in the room, 990s, the 1040s. You guys have seen this maybe 3 or 4 times already on Scan just tonight alone, going over these examples. So same concept. So morning move, ideally versus the 990s would be ideal. SKYH was on Scan on Friday, on Thursday night for Friday, and same kind of goal, right? So we're looking for this prior level of support to kind of retest, and then look for the failed follow through on a setup that looks like this on the daily. So same deal, and it's been working extremely well, and I will continue to trade that move until it stops working. Just like ALLG was up a little bit more on Friday, but let it do its exhaustion move and then look to join the trend. Don't try to find the top yourself, in my opinion. And I think a lot of people are trying to find the top on FRGE right now, which you can kind of see here. And let's see. You can see it kind of grinding along. So I feel like a lot of people thought maybe this was it, and then it started to kind of come back. At this point, you want to be cautious. I think a lot of people are thinking 20 is top. If we blow through that, I want to be able to be ready for when the exhaustion comes in, whether it's 21, 22, 23. But if you get too much too soon ahead of time, you're going to be covering into that move. So my goal is to remember when everybody else forgets, just like this VERU, which has been fantastic. And as you guys know, anybody that's been reading the scans, that 1340 line we've been using the last couple days, and it's been fantastic opportunity for sizing. So 1340, you can see flushed down this first day, and then it had a little bit of trouble. You can see how it was the base throughout all of this, and then it started to kind of fade, came back, hovered, 1340s finally exhaust out, and then fades off. So really nice opportunities the last couple days on it, using that level as a guide. And I do the same thing with ATER, with the 520s. And it's so easy to just draw these lines on your chart and kind of see where and why I picked those levels. So on Monday morning at 520s exhaust out and start to have trouble, 515s, 510s, 505s interest me versus that 520 sort of level. Other than that, AFIB, so far so good. This one was a long idea based off of thinking that everybody was treating it the same as EVOK. EVOK ended up selling off, and then they did an ATM, sold off more. So I feel like a lot of people got positioned thinking, hey, EVOK was super easy. I'm going to hammer in this thing. And then it ended up holding. So nice move regardless. Hopefully it breaks out, goes 150 to something crazy, fills that gap on the daily. If not, I'm moving on. And that's okay. And then the only other one I had on watch, have a small position in, was HCDI. And you can see the wicks that we talk about and a potential liquidity trap forming. So that's it. As always, I really would recommend having a shopping list, whether it's Apple, Neo, Shop, Tesla, you name it. TQQs, Amazon, or some cheaper ones, AMC, X, CLF. Just get familiar with all those charts so that when things stop coming apart, you have your kind of bounce watches ready. You know what would make a good entry, and you can react that much quicker. So it's going to take you a little bit of time to kind of figure out what ones you want to watch, what names you wouldn't mind, potentially positioning in and holding. But I promise once you do that, it's going to make things a lot easier when it actually happens in real life. So that's about it. Stay safe. As you guys know, I've been saying it. I'm ultra aware right now where, I've got my auto stops on my account just in case I do anything, dumb or reckless. So, if I get blown out, that's fine. But I'm keeping my risk in check leading into the summer. I always do something silly right before it. So I am being ultra aware that, risk management is my priority. And, the summers are my favorite. And you've seen, I've been trying to take off, days here and there, and that is my ultimate goal, is to not be just glued behind the screens. So I would, suggest that you be ultra aware of, when you're getting into a reckless decision. And remember that capital preservation is the most important. It doesn't matter if you're right or wrong. You need to know when the trade is not working and move on. You need to know when the trade is not a scale-worthy trade. That's why you see me start in on a lot of trades, and then I will not scale against trend. They can go as far as they want, but I'm not going to fight. I'm not going to stay wrong. I'm not going to scale into being wrong, because that in itself is wrong. What my focus is to get on the right side and continue to scale as liquidity suggests or allows, and try to get the max I can out of any particular trade setup that makes sense. So, and when you're wrong, just be wrong, or don't make yourself more wrong, because that's when you start to just maximize your risk, and that's not what you want to be doing. So you want to minimize it at any point that you can. So have a great weekend, guys. We'll see you in the room. And if you have any questions, you know the drill. You can leave a comment or email webmaster@investorsunderground.com. And enjoy the rest of your weekend.